What is going on, Ada Nation? Welcome to Dapp Central. My name is Fareed, and in today's video, as the video title states, I want to jump into 5 key things you can do to get ahead during this Cardano bear market. Now, as a preface, before I jump into today's content, this is going to be a slightly different format than my normal content, but I want to kind of break away from doing specific news updates or videos discussing specific dApps. Not because I don't appreciate the kind of content, but I also realize that we just need more educational based advice. And I'm going to try to provide that to you guys here today. So if you guys appreciate today's type of video, let me know down in the comment section below. I always appreciate your guys' feedback. Now, in the last week or two, we've seen some pretty crazy price action when it comes to crypto. Obviously, we're in the middle of a bear market. A lot of people are not really happy with some of the values that they see within their portfolios. And I will be the first one to tell you that I'm also in a similar situation. Not a lot of people are in profit right now. Not a lot of people will be in profit until sometime after the next halving or when the next bull run actually kicks off. Now, because we know that, we have to position ourselves in a way that we can make the most of our current time. And so what I have here today are going to be 5 key things that I think can help you and myself to get ahead in this particular bear market. So that said, let's go and jump straight into the very first item here, which is going to be to educate yourself. So you're watching a video just like this, which I'm going to be breaking down and providing you guys 5 tips, which is going to be coming from an educational perspective. And it's basically going to be up to you as to whether or not you want to implement these things. But my goal personally is to educate myself through using a platform like YouTube and through a platform that I have as a content creator, not only to educate my community, but to also educate myself along the way. And what I mean by that is, in order for me to educate anybody else, I have to understand those principles, right? So in order for you to be able to teach something, you have to understand it. And that forces me to therefore understand it as well. Now, when we're looking at the realm of crypto, a bear market can be an opportunity to enhance your strategy as well as your understanding of the technology, which is all coming to the forefront, again, through crypto platforms or through Cardano specifically. Now, a lot of this tech, when it's the bull run, people just don't have the time to sit down and really understand and learn. And these can be topics such as staking on Cardano, how smart contracts work, and even understanding things such as exploits and how to best behave on the network, right? When it comes to potentially sharing seed phrases, signing transactions. And there's just a whole list of different topics that I could go into. But I want to just say that during the bear market, because there's not a lot of hype, we have to take advantage of that and actually begin to deepen our understanding. That way we're up to date as to what is actually going on. And then that also allows for us to understand potential opportunities or find potential opportunities to actually leverage some of these technologies to our own benefit. So that is going to be the first topic or the first item I want to jump into there. And to kind of just go a little bit further, there's 3 things that I want to touch on, which kind of all circle around educating yourself. So jumping back into the presentation, number 1 will be to research projects. Very simple, right? If you find interest in a platform that you like, you can head over to a platform like Cardano Cube. You can head over to Twitter, Discord, etc. And you can kind of just begin to understand the project. Now, I personally recommend checking out their official website, whether it's their official front page where you can actually dive into the actual project, or whether it's an official forum for the project, right? But whatever you want to do, make sure you're going to the platform itself and that you're not going to some sort of third party to get your information surrounding the project. Now, part of that research or part of that process includes reading their white paper. So for example, I used to spend a lot of time and people would always, ask me how I've kind of got my knowledge surrounding projects, but I would spend the first 2 to 3 hours of my weekend mornings drinking my coffee, of course, or my tea, depending on, how I'm feeling that day. But I would also spend a lot of that time reading white papers, literally from the front page all the way to the very last page. Now, that does take some time. But what this allows for you to do is have your own understanding and for you to come to your own conclusion as to how the protocol operates and what some of the utility in real world value that it presents actually are. Again, it's really always good to get information from other places, especially if it's condensed, because it does save you some time. But reading a white paper in its entirety really lets you be more in tune as well as draw your own opinion surrounding whatever that particular project is. The third and last final piece there is going to be to watch content. I kind of touched on that a little bit. Watching content, especially if it's well produced and high quality, allows for you to get a condensed version of what the white paper and some of their forms may offer. So while it is a shortcut, again, you have to be careful who is actually behind the content and their relative knowledge as to the content itself as well. Now, I'm not speaking here from a high chair. This applies to me as well. If you don't feel comfortable following my content, that's completely okay. Find somebody that you are comfortable following their content. And when you do, make sure that you just understand that that is just a speck of the entire picture that you should be putting together yourself. So that is going to be it there for that particular slide. Again, touching on three key things here when it comes to that first topic, which is educating yourself. Number one, doing research and actually going to the official websites as well as forums. Number two, reading their white papers. And the number three, watching educational content. So that's going to be it there for that very first way to get ahead during the Cardano bear market. Hopefully you guys are enjoying this video so far. If so, make sure to go ahead and tap that like button. I really do appreciate it, and it helps me out here greatly on the channel. The second thing I want to jump into is going to be surrounding diversifying your portfolio. Now, you might be wondering, why would I want to diversify? Well, in a bear market, just like we're in right now, if you have all of your assets within one particular basket, if that basket doesn't perform well, you will feel that very, very quickly. Not only will it impact your portfolio, but you're also going to notice that your mood, your behavior, and just your willingness to stay in the ecosystem also wanes as the value of that portfolio wanes. I can't tell you how many different creators that we've seen coming in and then leaving Cardano as of late. And I don't blame them. Number one, creating content is extremely hard. But when you have your own assets to watch over as you're creating content about those things, it can be very, very easy to get discouraged, especially as the price of these assets begin to fade. Now, I'm going to be touching on, the fact that you should not always be focusing on price action here in just a little bit, but diversifying your portfolio helps to kind of hedge against the huge drop in the value of your portfolio that you might see in the event that you are not diversified. So that is going to kind of be it there when it comes to diversification. Again, I try to practice what I preach here. I'm not perfect by any means. And I'm also using this, as I mentioned earlier, as an opportunity to not only share my thoughts, but to also give me a way to implement what I'm also talking about. So I'm going to be taking my own advice here. I'll be spreading my portfolio out, investing in new things. And that's all going to be done after I educate myself, again, using that very first step or that very first topic that we touched on as a part of this video. Now, if I jump over into the next slide, it states here that while the market may be down overall, certain projects may be more resilient or have better long-term potential. I couldn't agree with this more. As we are now in the bear market, we're really starting to see who's building, not only within Cardano, but just within the entire Web3 and crypto space. And as you find out more about these projects, right, and you diversify, there might be times where some projects do better than others. If you take a look at the past 2 to 3 months, we had a meme coin run where certain meme coins just begin to just literally go to the moon. Now, whether or not that was a particular narrative, you be the judge. But we also even then saw something similar happen with DeFi, where we saw Milk, which is a DEX, so it's not necessarily DeFi, but we also saw LenFi take off, and then a few other protocols like Iagon, right? So if you would have been diversified and you would have had a little bit of ADA in each of those assets, you would have had a better likelihood of one of them breaking out and actually giving you a positive return in the bear market, as opposed to you having all of your eggs in one particular project that maybe just doesn't move. But very similarly, if you do have all your eggs in one basket and it does take off, then again, congratulations to you. It's just that in the bear market, that is less likely to happen as opposed to the other scenario where you have a basket of winners or a basket of assets and one of those ends up being a winner, as opposed to you having all of your assets in a single token and that particular token being the winner. Now, in a bull market, you can be a little bit more risk tolerant, where you could potentially get away with having all your assets or all of your tokens or ADA within a particular project. So just wanted to touch on that. That's going to be tip number 2, diversifying your portfolio. Jumping straight into tip or topic number 3. This is going to be one that I try to do here on the channel, given the fact that I am an educational channel focusing on the Cardano network. So that is going to be focusing on fundamental analysis. So during the bear, obviously price action is not moving. Nobody wants to watch, the price continuously going down. Again, that's really, I think, what kicks a lot of people out of this ecosystem and out of the Web3 space in general, is that they get very discouraged by looking at price action and day in, day out expecting, to see the break or expecting to see the kickoff of the bull run. If I'm being realistic here, I don't think that we're going to see huge price appreciation probably for another 12 months. And so what that tells me is that I've got 12 months to not only educate myself, but 12 months to focus on the fundamentals, and then 12 more months to also go ahead and actually add to any positions that I am bullish on after doing a thorough fundamental analysis. Now, if you're wondering, what does fundamental analysis include? I'll be covering that here in just a second, but from my standpoint, price is great, but it should not be the end all be all. I completely understand that a lot of people have come into crypto to create wealth for themselves, but along the way, you can find and you can learn about tools that you can leverage outside of crypto to also raise others to a level of understanding that you have, and to just kind of just help humanity overall. For example, lending and borrowing is something that a lot of people don't have access to. And if we understand how lending and borrowing works in a Web3 environment, not only can we get the advantage of that by investing in those tokens, we can also spread that opportunity to somebody else who may not be aware of those opportunities. So that's just one example, right, of us leveraging some of the information that we within Web3 who are early adopters have that the broader general space may not necessarily be aware of. So keep that in mind. Now, jumping back into the actual fundamental analysis and what you can watch out for, there's 3 things that I've noted here. Number 1, you should look into the actual real world use case for whatever project you're looking at. What this basically means is, when you're looking at the project, does this make sense? Is there a need? Is there a problem that this particular protocol is solving? If this is a platform that is trying to do something new that has never been done before, and there's no real identified problem, it may not necessarily be a bad investment, but you should probably be a little bit more reluctant to take a look at that, as opposed to something that you are fully aware of with respect to what the problem is and what the solution is, which that should be what the protocol is providing, and an actual market fit, right? For example, lending and borrowing. We have a lot of projects which are trying to tackle that within Cardano. We've got, for example, LendFi, Liquid. We've got Flag Finance. We've got Meld. We've got a lot of projects taking a look at a real world problem that a lot of people are already aware of, and they're all bringing their own spin or their own solution for that problem. So that, I think, is one that a lot of people can relate to. I'm sure you watching this video have been to a bank, you've tried to open up an account or maybe take a loan, and you've had to undergo background checks. You've had to basically provide a lot of information about yourself over to these platforms in order to get a loan. Well, within Web3, that is not the case. You don't need to go ahead and show your any identity. You don't need to go ahead and do a background check, right? So understanding that these are real world problems and we have real world use cases here, those are the kinds of things that you want to look at when you're looking at a platform. For example, when you look at a DEX, you understand that when you're buying or purchasing a regular piece of stock, right, or a piece of a company, that you have to do that through some sort of centralized exchange, which you have the likes of TD Ameritrade, Schwab, etc. But to do that in Web3, you can use a DEX. So the use case is there, right? So that's number one, real world use case. And then number two is going to be development progress. So when you're looking at some of these projects, you need to find out, are they continuously developing? It's one thing to come out with an idea. It's one thing to come out with a thought or a solution, but it's another thing to actually begin to deliver and build that out for the community to consume. So keeping up with updates such as official diaries where they're talking about their development progress, things such as educational videos coming directly from the team surrounding what the actual solution is and how to implement that, and then things such as actual Twitter spaces, Discord chats, newsletters. These are the kinds of things that you want to keep an eye out on. Now, with respect to that, the roadmap will be huge as well, right? So if a project has a roadmap, how closely are they sticking to that roadmap? Now, I come from a Web 2 space where I understand that not a lot of people are able to always stick to the roadmap, especially with Web 2 stuff. So for us to expect that in Web 3, people are going to stick to every single date and never miss a milestone, I think is very unlikely. And we're kind of setting ourselves up for failure with that kind of mindset. So I think we need to disconnect, number one, from the fact that people will deliver everything all the time. That's not going to be ideal. You know, for example, you take a look at Twitter. They were supposed to go ahead and deliver a lot of features like 5 or 6 months ago. That hasn't happened. Elon came along and said, hey, I have all the answers. I'm going to be able to fix everything in a matter of a couple of months. And they still haven't been able to do that. They're still figuring things out. You know, you take a look at Spaces, right? For the longest, they had so many issues and they vowed to make things right. But even in Web 2, there's bugs and there's problems and there's delays. So to expect that in a new frontier like crypto, that we're not going to have any delays, that we're not going to have any bugs, and that every single team that comes out basically as a startup is going to deliver 100% with sometimes little to no expertise and, you know, management and things of that nature, I think is completely uncalled for. So I think we have to lower our expectation, but still have a standard that whatever a project says that they are going to do, that they actually follow through and do that. So that's, again, keeping track of the developmental progress for some of the projects here that you're investigating when it comes to technical analysis. The third and last thing here is going to be surrounding tokenomics and utility. And again, this is going to be something that you're not going to have a full grasp on initially. I know, at least speaking personally, that I did not have a full grasp on at first, but I had to take a look at multiple projects and really kind of expose myself to what tokenomics were or are in order to get better at analyzing the tokenomics. So some of the key things, and these are just very, very basic, are going to be taking a look at the total supply, right? If you're taking a look at a tokenomics set where you have a really big total supply with very little circulating, that might not be the best scenario right now, because over the course of the future, more tokens will be coming out or being unlocked, therefore kind of diluting the current value of your token. So taking a look at the total supply versus the circulating supply is going to be key. And I kind of want to walk something back. A token having a high amount of, a project having a high amount of tokens isn't necessarily bad. It's the total amount of tokens in comparison to the circulating supply that really matters, right? So if there's a project with 10 billion tokens and, you know, they have a tokenomics structure where, you know, all of the tokens will be distributed in a matter of 2 to 3 years, that's not bad within itself, the total amount of tokens. But if you have a project with a high amount of tokens and, you know, they're only releasing 2 or 3%, and you can expect, you know, the remaining 97% to come out over the course of 10, 15 years, that in itself might be an issue, because again, over the course of that time, you're going to have more and more tokens coming out into the ecosystem. So keeping an idea of the total token supply versus how the team plans to distribute the entire supply over the amount of time is going to be something to look into. The second thing is going to be the actual allocation of said tokens as a part of the tokenomics. So you want to take a look at how much is going towards the team, how much is going towards marketing, how much is going towards partnerships, how much is going towards their public sale, how much is going towards their private sale, and potentially how much is going towards things such as their ISPO. So if you have a high allocation towards the team, some of those things, I don't want to say it's going to be a red flag, but some of those things can be somewhat concerning, especially if there's a pattern or huge allocations that may not necessarily seem to fit the community norm or the adopted norm for those particular sections. As an example, if you have more than 50% of the tokens going towards the team, that is a red flag, right? Traditionally, we want to see somewhere between 10 to 15 at most, 20% going towards the team. Again, keep in mind that they have to feed themselves because they are developing the solution. Without the team, there's no product. But at the same time, we can't have all of the tokens going towards the team to where then they do build a product and then end up dumping or selling those assets on some of the other holders. Now, if they personally believe and if they have security measures in place, such as vesting, then it's not necessarily a bad thing. But generally speaking, you want to make sure that token allocations are within the expected amounts that we want to see. Now, what I'm going to try to maybe do moving forward is draw up a quote unquote ideal case when it comes to tokenomics. Again, every team does them differently, but there are certain ranges that you want to make sure that some of these allocations are set forth. So I'll keep that in mind. But again, without making this particular section too long, I wanted to touch on that, and that was going to be focusing on the fundamentals. Now, there are some additional things. Again, I'm not going to harp on them here for this particular video, but if you guys want more information surrounding fundamental analysis, I'd be more than happy to go ahead and dive into that. And some of that can include the actual blockchain itself in which the protocol is built on, in which you can take a look at the active addresses, the transaction count, the TPS or transactions per second, etc. You can also dive into some of the financial side of things, right? Which include the market cap of the project, the liquidity and trading volume, as well as circulating supply. And then you can dive into the actual specifics of the project itself, which include the team, white paper, market fit, competitor analysis, roadmap, tokenomics, and utility. So a few things to touch on there. But moving into the next portion here, I want to jump into the fourth tip for today's video. And this one is going to be key here. And this one is actually one that you can do for almost free. And that is going to be to build connections. So as a content creator, I've had to learn this, and it was something that I learned very quickly, was that I am somewhat of a bridge with respect to connections. I connect the Cardano community with projects, and I connect projects with the Cardano community by, again, providing information and updates to you guys, right? So I am building up a network and I'm building relationships with some of these projects where now some of them have asked me to create content surrounding them. And then I'm also building a community here of you guys that appreciate educational content like this, that maybe want to go deeper into a project, and you kind of trust me to provide you guys with accurate and fact-based information surrounding those projects. So I've kind of found my personal fit here within the network and some of these entities, again, the community, the projects, the professionals, etc. But I want to challenge you, to connect and grow your own network when it comes to the Cardano community. So as a member of Cardano, the network includes enthusiasts, investors, professionals, projects, and content creators. So if you are not already connected with professionals, try to go ahead and do that. It might not be as easy as joining a Telegram group and then getting instant access to professionals. But if you really build and focus on creating connections, especially in the bear market, you can leverage those during the bull market. So let's jump into the next slide here. And these are going to be touching on some of the things you can do to grow your network. So number one, you can go ahead and join community events, right? So we have Rare Bloom coming up. We've got Rare Evo as well coming up. I'll be attending both of those. Again, as a content creator, I'm going to be hosting interviews to not only grow my connection with those projects, but to then also give back information to you, the viewer here, if you appreciate what I do here in those interviews. So it's a double win for me. Not only do I get exposure to some of these projects, but I also get to grow my own community. Now, you're not exempt from doing the same exact thing that I'm doing. you can go ahead and join these events, right? And this is probably the easiest way to actually get in touch with professionals, because there is somewhat of a barrier to entry here, because you have to pay for the ticket, you have to pay for the flight. I understand that, right? But if you're able to do that, the outcome on the other end, being able to be connected with some of these members within the community, being able to shake Charles's hands, to talk to Tim Harrison, to talk to Frederick Regard, to Ken Kadama, some of these heads here and CEOs of Emergo, Cardano, like these are huge connections that you can build. And it's not only with those members, you can also meet heads of projects. For example, I'm planning to have an interview with Rob Gregg. I met him last year. I met Josh Jones from the Cornucopias team. I got to meet parts of the team of Meld. I got to hang out with parts of the team of NMaker and so many other projects that'll be attending the event again this year. So I really want to challenge you guys, if you've never been to a Cardano community event, to take a look at some of the benefits, which include building your own network, but then also finding out and getting exposure to new people that you haven't met. It doesn't have to be just the professionals. You can also meet other enthusiasts just like yourself that are also going through the bear market. And one thing that I've learned is that it's easier to deal with these kinds of situations, aka the bear market, when you're doing so with a team as opposed to trying to deal with it by yourself. There's a certain level of autonomy that you have to have in the space. Obviously, you want to do your own research and come to your own conclusion and have your own mindset. But when you're able to do some of these things with other people, it really kind of helps to take some of the burden off you, and it gives you something else to do other than just looking at price action or focusing on the value of your portfolio. So that's going to be it there. Number one, community events. And one last thing I want to add there is check out Snapbrillia. If price is an issue as to whether or not you're able to attend some of these events, check out Snapbrillia. Nin Tran, who runs the actual platform, I think is giving away 50 free tickets to Rare Evo, which is taking place in Denver, Colorado. And then he's also giving away, or him and the team are also giving away 200 tickets into the NFT LV event, which will be taking place in Las Vegas. So if price is a barrier, check out those platforms. They're trying to do their best to grow the community. And all you have to do at that point is find transportation and find housing. So that's number one, checking out community events. Number two, joining forums such as Discord, X, and Telegram, right? These are things that are free. You don't have to pay for Telegram. You don't have to pay to be on Twitter. You don't have to pay to get into Discord. You can pay for premium features, but those are all things that you can decide on your own. When you get into these platforms, you meet like-minded people, and you do get access to professionals, but keep in mind that it's not the same thing as having a one-on-one chat or face-to-face chat. The good thing about platforms like Telegram, etc., is that you can quickly get access to a community. And so, for example, the Cornucopias game, they have 40,000 members within their Discord. And as a part of that, you can join at 2 o'clock in the morning, 3 o'clock in the morning. And you can find people there that are there for the same exact thing and that share a mutual interest as you. Again, simplifying some of these tough times during the bear market. If you ever want to learn, those are the perfect places to go ahead and ask, because everybody else in there knows just as much, if not more, than you. And you can leverage those communities to get your name out, make friends, while also learning and still getting updates directly from the team or projects that you support. So go ahead and check those forums out. Very last thing is going to be meetups, which is going to be somewhat similar to community events. But if you live in a local area, and maybe you have a passion for Cardano, consider starting a meetup. You know, this might be something that you might think might be a daunting task, but I personally live in a small city. I don't think that there's a lot of people here that know about Cardano, but if I could find 5 or 10 people here that do know about Cardano, and we can meet every Saturday at a coffee shop, at the library, or wherever, even at my own, residence, that is an opportunity to mesh and bond with more people, and we're going to see more people coming into Cardano and crypto as a whole. So if you can be a quote unquote pioneer starting meetups in your local area very early on, imagine the reputation and the network that you can have and build. in the next bull run when more people within your local area do become aware of what Cardano, what Bitcoin, what Ethereum, and all these platforms are building. So that's going to do it there for that particular one. We're going to jump into the very last piece here. As always, again, if you guys enjoy content like this, breaking down and providing guys with practical information surrounding crypto and what to do here in the bear market to get ahead of the curve or get ahead of the crowd, then make sure to go ahead and tap that like button. If it's the first time that you and I are meeting and you enjoy content like this, consider subscribing. And if you have any questions for me surrounding anything we're touching on, then make sure to go ahead and leave a comment down below. So last but not least, we are going to jump into the fifth topic, or the fifth thing you can do to go ahead and get ahead in the bear market. And that is going to be to seek investment opportunities. So I know early on I mentioned not to focus specifically on the price, but you want to use the bear market to, again, educate yourself, perform fundamental analysis, and as a result of doing those two things alone, you'll have a better idea as to what is an opportunity and what is not. So if you do your due diligence, you put in the time day in, day out, you follow projects, you read their white papers, you look at their roadmap, you will know by the time that you're done investigating that protocol or that project, whether or not it's something that you actually want to invest into, and whether or not it is an opportunity. For example, this is one opportunity that I'm personally looking into, the World Mobile Project. Shout out to Mickey, shout out to the rest of the team, shout out to Earth Node operators, shout out to the entire WMT community, but they are a gem in my personal eyes. Again, don't take my word for it, right? If you guys want to check out my content in my playlist, go ahead and do so. I just try to bring you guys the facts. But after doing my own due diligence, after reading their white paper myself, after understanding their proposition, after understanding the problem, I feel confident in saying that I see a value opportunity within the World Mobile Project. Whether or not you do is going to be up to you to do your own due diligence, to do your own research, because as crazy as it sounds, I might think that World Mobile is an amazing project, and I see and I join their Twitter spaces and I hear people literally saying World Mobile is a rug. And I'm just like, where are you getting this information from? If you join their Twitter spaces, if you watch interviews, if you talk with the team, if you jump in their Telegram, if you jump in their Discord, you would have a clear idea and you would know very well that they are the furthest thing from a rug. So again, I'm just one person. You can take my opinion, but that should not draw the conclusion. You want to draw your own conclusion and then identify whether or not you feel comfortable investing in a particular project. So that is going to be the last tip there. Again, do your due diligence and seek investment opportunities. That last piece there is somewhat tied to a little bit of price action, but I don't want that to be the sole factor or the sole key decision as to why you're investing in those things. But if you follow all the other steps that we talked about as a part of today's video, number one, educating yourself, number two, diversifying your portfolio, number three, focusing on the fundamentals, and then number four, building connections here, and then number five, right, seeking value opportunities, you cannot and you will not go wrong. If you found any part of today's video to be helpful in any way, shape, or form, I would appreciate you if you could tap that like button. If it's your first time stopping by the channel and you want more content like this, consider subscribing. And if you have any questions for me surrounding Cardano or crypto in general, then make sure to go ahead and leave a comment down below. That said, Cardano community, I will see you guys in the next video.